Good morning. 2020 Form 45CC. 2. Depreciation and amortization. 15. Depreciation method. When you know the depreciation method that you wanted to use for the property class your assets is in, you'll enter the method in column F, section B, for asset placed in service during 2020 tax year under the General Depreciation System Part 3 of Form 45CC2. So what is depreciation method? Well, there are four. You have 200, and under the General Depreciation System, let's start it. So the MARC, Modified Accelerated Cost Recovery System, has General Depreciation System and Alternative Depreciation System. Most of the time, General Depreciation System is used, and unless you are required, the assets you are depreciating is required to use Alternative Depreciation System, you will be using the General Depreciation System. So you have four options, all included. You have the 200% decline balance under General Depreciation System, 150% decline balance method under General Depreciation System. You have straight line method under General Depreciation System, and you have straight line method under Alternative Depreciation System. So for the asset class in 3-5, for any asset included in 3-5, 7 and 10 year property class, 3-5, 7, 10, you have the option, and the default is 200% declining balance method, but you could use the 150% declining balance or the straight line method under the General Depreciation System. So if you choose 150% declining balance method, you write 150 dB in column F. Let's go back there. So if you for assets that have recovery period of 5, for instance, you choose 150% declining balance method, then you write 150 space dB. If you choose straight line method, you'll write S. I just like to write SL. I believe it's S/L. And you'll write that in column F of under section B of Part 3 Form 45CC2. So and for you even have the option. So if you for assets in the farming business, there will be 15 and 20 year property class life. Instead of 150% decline balance method, you could choose straight line under GDS, General Depreciation System, or the straight line under Alternative Depreciation System. So for the 15 and 20, where you'll find a lot of farm equipment, I think the default is 150% declining balance. So you could use straight line under GDS or straight line under ADS. And keep in mind, if you want to use ADS, then you won't be putting the assets in section B, it'll go in section C. But if you are using the general depreciation system, that's when you fill up section B for the assets. And I mean, that's what you should be doing it anyway. But if your asset is required to use ADS, then you use ADS. So what is the benefit for each one of those depreciation method? So depreciation method benefits. The 200% declining balance depreciation method pretty much allows you to claim a higher depreciation deduction during the first few years, and then the remaining years it will turn into a straight line method and you'll take equal deduction. For 150% declining balance depreciation method, that allows you to claim a higher depreciation method as well during the first few years, but the deduction will be a little bit lower than the 200% declining balance. And then for the remaining years, the rate will turn into a straight line method. And for the straight line depreciation methods, you'll take equal depreciation deduction every year except the first and the last year of the assets. I mean, yeah, the first year you depreciate the assets, and the last year that you depreciate the assets. And depending on your business, you can choose what you want to use. If you're if you want to take a higher depreciation deduction, then you can just use the default 200%. And I like to use a straight line. And here is the thing. So if you use 200% declining balance, and later and at the beginning you depreciate the asset 100, you use the assets 100% in your business, and in later years you change the percentage used, you use it for personal and you use it for business, well, you won't be able to continue depreciating it with that 200% decline balance. So you have to switch to straight line. When you are depreciating an asset, to my understanding, when you are depreciating an asset that you use for personal and for business, it is a listed property, so it uses straight line depreciation. If you use 200% and later you have to switch to straight line, it becomes a little bit more complicated. So when you use 200% declining balance, and so when you make that switch, the difference, so the don't know how I'll put that, but you might have to the basis for depreciation is going to change, and you are going to use this, pretty much you are going to calculate the depreciation on your own. So once you start using something for 100% for your business, the best thing you could do is just keep 100% in your business. But from the moment that you start using it for personal use as well, and straight line should be what you should be using to start with, there is a chance that you might have to put a part of the depreciation you took prior back in as an income. So to avoid any issue with that, I just prefer to use straight line from the start. Straight line, you don't depreciate a lot the first year. You depreciate equal amount. It works when your business is young and you are not generating a lot of revenue. That's a good depreciation method to use as well. As you are now claiming a lot of costs, a lot of deduction to decrease your revenue. So you want to show profits in your business, and so it could be a benefit as well to use the straight line. But if you have a lot of profit, you wanted to decrease your taxable profits, section 179 could be claimed if you want to expense the full cost of the assets and you didn't max out the maximum $1,040,000. Section 179 that you could claim in 2020, or the total assets you place in service during the year of 2020 is now over $2,590,000 for the maximum you could take out of, you could claim as section 179 to decrease. So that's that. And I mean, you could claim that you have the option for special depreciation allowance as well if your assets is in the category that qualify for a special depreciation allowance. You could take that as well, and then if you have anything remaining, you could depreciate it. But from the moment that you stop using the asset 100% in your business and you start using it partial for personal use, you have to calculate the depreciation using straight line. You'll calculate it, and then you'll compare what you will have taken if you have used straight line for the number of years that you depreciate the item. You'll compare it to the depreciation deduction you took for the prior years, and if the depreciation you took for the prior years is the total is higher than the straight line depreciation for the number of years that you have depreciated the item already, then the difference will be an income that you have to add back as an income to your business tax return. So that's something you need to keep in mind. And to avoid those type of issues, I like just to stick to straight line depreciation method. But once again, it is your business. You are the one in charge. You are the leader of your business, the CEO or the president. So you do as it fits your business. You do what is in the best interest of your business and think long term. When you are placing an asset in your business, think about how you intend to use it and keep a good record of how you are using it, so that even if you have to add back a recapture related to depreciation taken in prior years, well, just know what you are heading into. Taking those high deduction to lower your taxable profit is great, but if you don't respect the rules and you change your own rules later, then you'll face the consequences as well and calculate the recapture to add it back. And I believe the recapture you might have to use form 4797, I believe, but I will mention it in one of our videos probably, to don't quote me on that on the right form, but yeah, there is a form you'll be able to use to calculate the recapture, and I don't know if I'll be able to find information on it quickly here. And by the way, they have there is a worksheet on page 38 of the publication 946 that you could use to calculate the basis of your assets. Okay, well, if you believe you need to recapture a prior year depreciation, you might want to read through publication 946. It does not cover it in deep, but it does not go deep in it, but it will mention it. At some point. And that's something as well, when you group assets, there is a possibility for you to recapture a part of the depreciation if you take an asset out of your business earlier than expected. So when do you recapture? So they have that on page 52. But I'm more looking for the publication that you'll use. I'm not seeing it mentioned, but I believe it's okay here. 47.97. So I was right about that. 47.97. You might have to use 47.97 to calculate the amount of recapture to add back as income to your business tax return. Thank you so much for your time. So now you know the different type of depreciation method, and you will choose one that best fits your business. And when I just like to stick to one, and that's just a part of the equation going toward determining the rate you will use to calculate the depreciation deduction. So thank you so much for your time. Thank you all that watch our videos. Thank you you all that subscribe to our channel, and we thank you very much for all of your comments. Thank you for listening to our podcast. Thank you for reading our blog articles. We have all the articles related to Form 4562 excuse me, in the category how to depreciate a business asset, and we have videos in a playlist called 2020 Form 4562 Depreciation and Amortization, where we have all the videos related to how to complete Form 4562 and how to depreciate a business asset. So we have a lot of videos on that topic to help you understand how you should be claiming depreciation deduction on your asset, how you should depreciate an asset you use in your business. I'm Afiavi Ojune Liberman, creators of Liberman Consulting L.L.C. YouTube channel, Liberman Consulting L.L.C. podcast, ninasoup.com, our blog. We do have online stores, including liberdownload.com for digital products, liberoutlets.com for resale products, liberlabel.com for custom apparels, and Nina's Soap for natural products. Thank you so much for your time.